In the Trader Rundown today, joining me now is Dan Deming of KCAM Financial. Always a good way to start our week. Thanks for coming on the show, Dan.
Thanks, Angie.
And what a week this could turn out to be.
Big week.
We have big earnings starting up today even.
We do. Google starting off the week, and then Facebook and a lot of other big S&P names throughout the week. Also, Fed this week.
Just to add to the fun.
Yeah, FOMC rate decision on Wednesday as well.
So what do you expect out of the Fed?
I think the market anticipates that they're not going to say much. I mean, she testified a couple weeks ago, kind of played her terms, I believe, and there's no news conference or anything. It's just basically a full announcement. But there could be something in the minutes there. There could be something. The market's always cued off of that, and so keying off of that. So we could see a shift in the expectations if there's something in the announcement that the market doesn't anticipate.
Absolutely. After we heard from Fed Chair Yellen, do you feel like those rate hikes will come later in the year? Is that what traders are anticipating?
Well, it's week to week. It's like right now the market, the bond market has the attention span of a gnat. We saw last week rates come back down after bubbling up 2 weeks ago. So I think the market's confused, and I think that is done intentionally by the Fed. I really think that the Fed is trying to kind of mix their message because they don't want the market to lean too hard one way or the other. And so I expect that they're going to hold off until December at earliest. Now they have indicated that that's probably the next potential hike. So the market's pricing that in right now, and I don't see any reason with the numbers that we've seen from an inflation standpoint that they change that process right now.
Yeah, remember the days of Alan Greenspan? He was quite the wordsmith.
Oh, yeah.
He knew how to couch it just so, and you never really knew what was going to happen next, most of the time. Let's take a look at a big trade that went through here at the Chicago Board Options Exchange last Friday. Unbelievable. 1 million plus contracts traded in one single trade. Somebody came into this market. What do you think this person, this big investor, is anticipating for the market?
Well, that's a tough call because you don't know what they're laying that off against. If it's just an initiation, just with the expectation that vol's going to rise into October, because it was an October trade that went up, Angie. What we're looking at was an October VIX call trade versus a put. So basically they bought one VIX call, they sold two higher side VIX calls, and they sold a put, and all of that is basically kind of playing for a range somewhere between 15 and 25 in the VIX.
That's a big range though, Dan.
It's a big range, but at the same time, if we do see any normalization in volatility over the next couple of months, historically the average for the VIX is somewhere around 19. So if we see some normalization, it wouldn't take too much to get the VIX back to 15 to 19.
And what about the calendar timing of this trade? What do you make of that?
Well, that is interesting. And October historically has been a volatile month. At least we've seen shocks to the market.
There have been some crashes.
There have been some rough Octobers in the past. So I think partially that could be playing into the mindset here. Also, as we move to the second half of the year, a lot of analysts kind of have been limiting their expectations for the market because we've seen such a significant run up in the first half of the year.
All-time high.
So I think that the market and a lot of market participants are somewhat anticipating at least a flat to possibly weaker market in the second half of the year.
Well, thank you for all of your trader talk today.
Well, thanks for having me on, Ange.